Hi friends, welcome to EduTap. So today we are going to discuss some of the important MCQs which can be asked from the topic accounting for investment. So basically we are going to talk about the accounting standard which is relevant in respect of investment and what it says about different valuation, measurement and recording aspects of the investment. So let's start today's discussion. So the first question that we have is, which of the following accounting standards deals with accounting for investment? Options are AS10, AS13, AS26 or none of the above. So these are the different options that we are given. So I believe all of us, we make some kind of investments. We have some money and we invest it in different avenues. We may buy shares of a company. We may buy a new property. We may buy new shares. We may lend it to someone to earn interest. So there are different sorts of investments which are being made by everyone. So there was a requirement to have an accounting standard which should deal with investments. This accounting standard, it should specify how investments they are to be recorded in the financial statements. So for a company's perspective, for a business perspective, let's suppose there is a company ABC Limited. Okay, now this ABC Limited is doing business of, say, buying and selling of pens. It is buying pens and it is selling these pens. Now a pen is bought and a pen is sold. So enough profit is made in this particular process. So suppose this company made a profit of 10 crore and out of this the company is having enough cash the company is having enough of the profits in cash. Say rupees 5 crore is being held in cash or bank balance. Now this cash, it is simply lying idle with the company, or the bank balance, it is not going to pay any interest to the company. So the company decides to invest this money in maybe the shares of another company, in maybe it may decide to buy a new property out of it. It may decide to give it as a loan to some other company. It may decide to buy debentures of another company. So this company is going to make these investments. Okay, the investments, they are going to be made. Some investments, they may be made for a long-term perspective. Okay, the money is to be going to be invested for a very long period of time, 5 to 10 years, maybe the time period. And some money may be invested for a very short span of time, maybe 2, 3, 4, 5 months. So there may be some short-term investment, there may be some long-term investments which may be made by this particular company. Now the problem will arise when we would be preparing the balance sheet of this company. So whenever we are preparing the balance sheet, while preparing the balance sheet on the asset side, we are all aware that these investments, they are the assets of the company. They are the assets of ABC Limited. We have to record these investments. At what price should I record these investments? Suppose this 5 crore, it was put in the shares of Reliance Limited, and now the value of the shares of Reliance Limited, it has changed. Now suppose the value is 5.5 crore, or now the value may even be rupees 4.5 crore. So how do we account for the investments while preparing the balance sheet, while preparing the financial statements? So this is something we wanted to know, and this is something which is provided in the accounting standard 13. So accounting standard 13 is the one which deals with accounting for investment. It also defines investments. It says that investments, they are the assets which are held by the enterprise for earning income. So they are the assets for earning income, and how this income is to be earned. So they are the assets to earn income, and this income is going to be earned by way of dividend, interest or a rental, or by capital appreciation or some other benefits. So if we are putting in money in the shares, we would get dividend, or we may also get capital appreciation. The price of the shares are going to increase. We may get interest on a loan or debentures. We may get rent if we are investing money in a property. So this standard, it tells us how we have to account for the investments in the financial statement of enterprises and how the different disclosures have to be made in respect of investments. So now we can easily answer this question. Answer is going to be option number C. AS13, it deals with accounting for investments. Now let's move to the next question. As per AS13, investments are classified as current if they are intended to be held for not more than 3 months from the date of acquisition, not more than 1 year from the date of acquisition, not more than 2 years from the date of acquisition, not more than 3 years from the date of the acquisition, or none of the above. So as per AS13, the investments, they are classified into two types. One is current investment and other is long-term investments. So this is the classification which has been made. So let's try to understand the difference between the two. So there are two types of investments. One is current investment and the other one is long-term investment. Now it says that the current investment is one which is readily realizable. You can easily sell it in the market and get money for it. And the second point is that it is held for a period of not more than 1 year. So you are holding it just for a period of 1 year. So if these two features are present, then the investment is going to be current investment. One is it is readily realizable. You can readily realize this particular investment. You can sell it and get money out of it. For example, if you have shares of a company, shares of a listed company, say Reliance, Tata, anything else, so you can easily sell them in the stock market and easily get your money back. And if you are holding these shares for a period of not more than 1 year, then they are going to be current investment. And any investment which does not fulfill any of this criteria, this is going to be a long-term investment. This is going to be a long-term investment. So every entity, it has to disclose the current investments and long-term investments separately in the financial statements. So whenever we are preparing the financial statements, we are preparing the asset side, we have to disclose the investments separately. We have to say that this much amount is current investment and this much amount is for long-term investment. So now we can easily answer this question that as per AS 13, investments are classified as current if they are intended to be held for not more than 1 year from the date of acquisition. So answer is going to be option number B. Now the question is carrying amount for current investment. Options are cost, fair value, lower of cost and fair value, higher of cost and fair value, or none of the above. So as already explained to you, there is one current investment, there is another long-term investment. Now we also know that they are to be separately disclosed in the balance sheet. The question arises, at what value do we disclose them? Do we disclose it at their cost or their market price, or do we disclose it at the lower or higher of the cost and market price? So this is what we have to understand here. So friends, accounting standard 13 is very clear in this regard. It says if you are talking about current investment, they are to be valued at cost or fair value, whichever is lower. So we have to find out that which of the two, cost or fair value, it is lower. We are going to record the current investments at this particular amount. So if we have invested some money in the shares of Reliance and the value of the shares of the Reliance, it fluctuates. Suppose we bought the shares on 1st of January 2021 and these shares were bought for rupees 10,000, and at 31st March 2021 the value of the shares, it was rupees 7,000 only. Okay, so now at what value do we record them? We have to record them at rupees 7,000. And if the value of the shares, it went up to rupees 12,000, in this particular case, we are going to record it at rupees 10,000 only. The cost or fair value, whichever is lower, this is the principle which has to be followed in valuing the current investment. So once you have classified an investment as current, you have to follow the principle lower of cost or fair value. Long-term investments, they are usually carried at a cost. So if you have made a long-term investment, you have invested in a property from long-term perspective, or you have bought in the shares of any company and these shares are to be kept in for a very long period of time. You have bought some debentures of a company and you are keen to hold them for a long period of time, more than 1 year. So in this particular case, you are going to carry them at cost only. So if the shares of the Reliance, they were to be held for a very long period of time, even if the price declined to rupees 7,000, we are going to still record them at rupees 10,000 only. But you have to remember this another point which is mentioned in the accounting standard. Now the standard says that if there is a decline other than temporary, okay, so it means if there is a permanent decline, if there is a permanent decline in the carrying amount of the long-term investment, then you should reduce this amount and you should charge it in the profit and loss statement. Now you bought the shares of Reliance for a very long term. Okay, you sought to keep them for a period of say 10 years. You bought them at rupees 10,000 and on 31st March 2021 the price was rupees 7,000. Okay, and now when you went on to find out the reasons behind this decline in the price, you got to know that this reduction is going to be a permanent one. You got to know that the company Reliance is not doing very well. It is in very poor shape. Some of the businesses that the company is doing, they have to be wound up. Some of the licenses of the company, they have been cancelled. The profits are very much dwindling, and you get to know that this decline is a very much permanent one and it may not be reversed in the future. So now what you are going to do, you are going to record it at rupees 7,000 only. You are not going to record it at cost. You are going to record it at rupees 7,000 because this decline is not temporary. It is rather a permanent decline. So if in the question it is specified that there is a permanent decline in the value of the investment, then you would have to consider it while valuing the long-term investment. Otherwise, the question, if it does not say anything, you have to simply say long-term investments are valued at cost. Long-term investments, they are valued at cost, and current investments at cost or fair value, whichever is lower. So now we can easily answer this question that the carrying amount for current investment is the lower of cost and fair value. Answer is going to be option number C. Now the next question is, on disposal of an investment, the difference between the carrying amount and the disposal proceeds net of expenses is. Options are shown separately in balance sheet, recognized in the profit and loss statement, written off over a reasonable time period, ignored, or none of the above. Now this question is trying to ask you this one thing, that suppose on the balance sheet date, suppose on the 31st March or on the 1st April 2021, what happened was the shares of the Reliance, they were shown at rupees 10,000. The balance sheet value, it was rupees 10,000. The carrying amount, it was rupees 10,000. And you decided to sell the shares of the Reliance on 30th June 2021 and you sold them for, let's say, rupees 12,000 or suppose rupees 8,000. Okay, so now there is a difference between the two amounts, the difference between 10,000 and 12,000 or difference between 10,000 and 8,000. So there is a difference of rupees 2,000. Okay, so how are you going to account for this difference of rupees 2,000? So this is what is being asked, whether it is to be shown separately in the balance sheet, whether it is to be shown in profit and loss statement, whether it is to be written off over a time period, or whether it is to be simply ignored. Now the accounting standard 13 is very clear in this regard. It says that on disposal of an investment, the difference between the carrying amount and the disposal proceeds net of expenses is recognized in the profit and loss statement. So the carrying amount, it was rupees 10,000. You have sold it for rupees 12,000. Now this rupees 2,000 is going to be your gain and is going to be shown in the profit and loss statement as a gain. If the situation was reversed, you sold the investments at rupees 8,000 only, then this rupees 2,000 would have been a loss, and this loss would again have been reflected in the statement of profit and loss. Now, one thing more, it has been specified here, disposal proceeds net of expenses. Now, if you are selling your investment and you are paying some brokerage on it, some other transfer fees that you are paying, you have to reduce it from the disposal proceeds. You have to reduce it from the 12,000 or 8,000 that you are getting. And after reducing these expenses, you would be arriving at the net gain or loss, which would be transferred to the statement of profit and loss. So this is something that you have to remember. It is very easy and you might find it very easy to remember. So now clearly the answer to this question is going to be option number B. The amount is to be transferred to the profit and loss statement as profit or loss. Now let's move on to the next question. Now I would like you guys to answer this particular question. AB Limited is engaged in trading of mobile phones. It bought the following items during the year: equity shares of Tata Limited, debentures of Birla Limited, property in Mumbai for letting out, new models of iPhone as stock. Which of these would be classified as investments for AB Limited? Which of these are going to be investments? Whether 3 of these are going to be, or whether all of these they are going to be classified as investments for AB Limited. Now, if you remember the definition of the investments which we talked about in the first question itself, now this definition was very clear that investments are the assets which are held by an enterprise for earning income by way of dividend, interest and rental. So if you are having shares, dividend is going to be the income. If you are having debentures or you have given some loan, then interest is going to be the income. If you have a property as an investment, then this rent is going to be the income, or you may keep the investment for capital appreciation for increase in the price. So the price of the property or the price of the shares, it may also increase. So this is also a feature of investment. Now, one thing that has been expressly clarified in the accounting standard itself is that some assets which are held as stock in trade or inventory, they are not investment. Okay, if you are in the business of buying and selling of pens, you would also have lots of stock of these pens. Now these pens would not be classified as investment. So this is something that you have to remember, that the assets which you have as stock in trade or inventory, they are definitely not going to be your investment. They are going to be classified as simply stock or inventory. So now in this particular case, we can easily make out that this company is in the business of trading of mobile phones. Now the stock of iPhones that it has obtained, it is not going to be an investment. The remaining three, equity shares, debentures or property for rental income, this can be an investment for the company. So the answer is going to be option number B, 1, 2 and 3. So friends, this was all about our discussion on this very short accounting standard, AS 13 accounting for investment. I believe you have understood all the relevant aspects about it. So this was all about the today's discussion. Bye bye, take care, all the best and keep working hard.